Welcome to Chit Chat Stocks. Before we get into this episode, we want to talk about our friends at Public. Heads up, folks, interest rates are falling, but you can still lock in a 6% or higher yield with a bond account at public.com. That's a pretty big deal because when rates drop, so can the interest you earn on your investment. A bond account allows you to lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds. So while other people are watching their returns shrink, you can sit back with regular interest payments, but you might want to act fast because your yield is not locked in until you invest. The good news, it only takes a couple of minutes to sign up at public.com. Lock in a 6% or higher yield with a bond account only at public.com/chit chat stocks.
Welcome to Chit Chat Stocks. On this show, hosts Ryan Henderson and Brett Schaefer analyze businesses and riff on the world of investing. As a quick reminder, Chit Chat Stocks is a CCM Media Group podcast. Anything discussed on Chit Chat Stocks by Ryan, Brett, or any other podcast guest is not formal advice or recommendation. Now please enjoy this episode.
Welcome in. We have another episode of the Chit Chat Stocks podcast for you this week. We have a fantastic interview coming up with Shawn Wang from Latent Space. It is I'll say, covering anything AI. A lot of the stuff, for me and Ryan, it might be going over our heads and it might be a little too hard technically for us, but that's why we brought on Shawn to the show today. For a lot of public market investors, this new AI stuff, it's hard to, see what is working, what's just a narrative, what all this stuff that's getting thrown at us during this boom times. So Shawn, we wanted to bring you back on the show. You came on, I think, almost exactly 2 years ago now to talk more cloud stuff. And now we're really going to talk about cloud AI and how it is impacting the startup ecosystem. So Shawn, as we kick off the show, what is your relevant expertise in this booming AI field?
Oh God, that's the $1 million question here. So I am. So for listeners who haven't heard back the previous episode that I was on, I was finance and public markets guy, and I was in Balyasny, a hedge fund, for my first career, and then I changed careers to tech, where I worked at AWS and 3 unicorn sort of developer tooling cloud startups. My relevant expertise is, on some level, I'm just a software engineer that is building with AI now. And then on another level, I actually, when I was an options trader back in the sell side, I actually did a lot of natural language processing of the Bloomberg chats. So I fed all of the Bloomberg chats into a pricing mechanism, then built our global pricer. So our entire options desk was running off of that thing. This was about 13 years ago. So, I've always had some involvement with like AI, but it was never a big part of my identity. And I think the more foundation models came into focus, and foundation models is a very special term, as opposed to traditional, maybe machine learning finance that a lot of your listeners might be familiar with. Then you start to build differently, and there the traditional software engineer skills become a lot more relevant. So relevant expertise now is that I guess I've sort of popularized and created the term of AI engineer, which you can talk about, and created the industry such that Gartner now considers it like the peak of its hype right now. And I consider that both a point of success and also a challenge, because I have to prove Gartner wrong that it has not peaked. But they put us at the top of the hype cycle, which is kind of funny because I started it. So
Yeah, it's it's a unique challenge. But yeah, funny anecdote. Okay, so a lot has changed since we last spoke.
Yeah.
Pretty much this whole world of AI that everyone's talking about now, or at least has become mainstream, I believe that kind of kicked off right after the discussion, or our last discussion. So I guess the last discussion was really focused on the cloud computing industry broadly. And that was actually right around the time when AWS, Azure, GCP, all the revenue growth rates were coming down and actually now, with the hindsight, bottoming. So My question for you is what has changed over the last 2 years, and why has revenue growth at the big cloud providers reaccelerated?
Again, like revenue growth at big cloud providers is due to factors that probably I don't have a full appreciation of. I also challenge the idea that everything has changed. I think in some ways this is just like the next wave of something that was just a broader, maybe like 20, 30 year long trend anyway. So we needed more cloud compute. Now we need even more cloud compute. Now we need more GPUs in the cloud instead of CPUs, right? Like, what's really changed? I don't know. Like, people still want serverless everything. People still want orchestration. People still want, unlimited storage and bandwidth and all the sort of core components of cloud. So in that sense, it hasn't really changed. I do think that if you see there are plots over time of the amount of money and flops invested in machine learning models that actually used to follow a pretty log linear Moore's law type growth chart for the last like 40 years. And then you had 2022 happen, and now everyone's like, oh, you can train foundation models now. And actually you've seen a big inflection upwards in the amounts that people are throwing the money in there just because they see the money now. So like it's like obvious to everyone, including us, including me, in a way that it wasn't obvious to basically everyone but Sam Altman and Satya Nadella circa 2019. Like they knew this 5 years ahead of everyone else, and that's why they went big on OpenAI. But now that we see this, obviously everyone's throwing money into NVIDIA, basically.
Why are, and this is maybe a question I think I know, but I'd like the answer again. And it feels like it's maybe a basic question, but a lot of, I think, listeners are going to want to kind of understand this connection. Why do these new AI companies require so much upfront spending on NVIDIA chips, cloud computing costs, all that stuff?
Yeah, I mean, so you have to split it by whether you're a foundation model lab or you're basically everyone else that consumes foundation models. So the rough estimate for, let's say, GPT-3 was like 50 million to 100 million in compute for one run. And for every one successful final training run, maybe you have between 100 to 1,000 prior runs before that, right? So just pure R&D. The estimate for GPT-4 was 500 million. We've actually had 2 generations of frontier models since then, just for OpenAI. So that would be GPT-4o and o1. Those are the models those are only the models they've released. And also those are only the text models. We haven't counted the video models and all the other stuff. So it's just a lot of upfront investment, right? Like I think it's like the classic capital fixed cost upfront thing where you have a pre-training phase where you're just consuming all of the internet data. That's there's nuances to that, but we won't go into that. And at the outcomes, the other end, 3 to 6 months later, you outcomes a model that you then spend another 6 months fine tuning and red teaming and post training, and then it's ready for release. So there's OpenAI doing that, and then everyone else trying to copy them. Anthropic's the most successful so far, but there are others kind of on their tail. I would say Cohere, XAI, Meta, all these other companies that we're naming. There's sort of like a second tier of frontier model labs that are out there, and all of them need enormous amounts of compute just for training. Once they're successful training, then they can start serving the models to people to build on top of, and that compute workload starts switching to inference. So there's a classic question of how much money goes into compute and how much goes into inference. It's typically between a 2 to 3 ratio of compute to inference, or a 3 to 2 ratio, depending on how you set up. So that's what Google DeepMind runs at. It's like a 3 to 2, 2 to 3 ratio. And I think it makes sense. The question now, though, is like OpenAI's finances are relatively public, and they basically make zero margin on their business right now as it stands, which is really interesting because then you should use the crap out of it because they're giving it to you for nothing once you amortize all the costs. So they're really banking on reaching some bigger goal, some next generation. They're not trying to make profit in the current generation models, and that's something that you as a builder or an investor should exploit, because you're getting this effectively with no margin.
Yeah, that's not bad. Or Ryan, you go ahead.
Yeah. So I guess, first of all, for anyone that's listening to this and wants to learn more, Latent Space is a wonderful blog, and it has a lot of the numbers or that Shawn is kind of referencing here, especially with the OpenAI economics, which look not like they don't look the prettiest when you look at it on a chart, but and one of those charts you shared, and they're certainly running it at cost at the moment. My question, I guess, is you mentioned the foundation models, very costly to build from the ground up. What about, so there's the foundation models, and then you said there's everyone else. If you're in the everyone else camp, how costly is it to start? Is that purely just the, as they say, GPT wrappers, I guess, or is there more included in that everyone else?
Yeah, GPT wrappers are a common way to phrase it. So I have been on the side of arguing that GPT wrappers are good, actually. This is something that was not consensus 2022, 2023. But it turned out that like basically the sort of middle tier of companies that tried to not be GPT wrappers, tried to train their own custom models to compete with OpenAI, those were the Inflections of the world, those were the character AIs of the world, they all folded. All of them. They all got acquired by like the Amazons, the Microsofts, and all those guys. Stability, remember Stability AI? I started Latent Space because of Stable Diffusion, and that's folded. Like it's it's really hard to be an independent lab with like the mid tier of money. Like you have to, you're just going to be crowded out by like the biggest labs. There's some exceptions for different modalities like video and voice. But yeah, I mean, like for the sort of capital light startups, it's never been easier, never been lighter or more efficient in capital to start with a foundation model that's either open source or provided via an API. And you start from there, you build your customer base. And eventually, if you need to, you can train your own custom models to serve your customers for high volume use cases. But most people don't even need to. I've interviewed someone on my podcast called Codium, who used to develop their own custom models. They've given up, and they've just decided to just wrap OpenAI and Claude, and they're a unicorn now as well, and they're doing very well. And they considered it one of the biggest mistakes of their startup journey so far, which is trying to train their own model, because they were like, there's no point. Which is fantastic news for foundation model labs. That's exactly what they want to hear, right? Like that you're completely reliant on them. So I think there's a sort of uneasy ecosystem of reliance from like everyone who consumes models and the people who make the models. But yeah, I would say it's very easy now to create an AI startup, and it might be the easiest possible. I would say then, and I think the last thing is there's another component of this which you might not be considering, which is the amount of proprietary data you have access to, right? Like abstractly, when you start a company, like it's a sum of like your people, your sort of unique resources, and maybe your technology sort of insight or whatever. So maybe you don't have like special unique insight. Maybe your people are relatively commodity too. But if you have access to some data you can't get anywhere else, which is something that I've worked on for my company, Small AI, then people will beat their way to your door just to get at that data. In the same way that Bloomberg, like the Bloomberg terminal, like sure, like it's a bundle of stuff, but really like it's the feeds, it's like the pricing, it's like the journalism that you get out of the Bloomberg terminal that makes it worth so much. And then obviously the network effect of the Bloomberg chat. So yeah, proprietary data, you're like people are actually spending more and more and more money on that. Because I think relatively everything else is becoming more commoditized. So then the relative profits accrue to data.
Okay. Follow-up question here. So when you mentioned that a lot of people are just kind of calling it quits on building their own foundation model and just leaning on OpenAI and I believe Anthropic was the other one, Cloud. It makes it sound like that's where the real moat lies. I guess my question to you is, with the quote-unquote GPT wrappers, do you think we'd like to talk about moats all the time here. Can you build a moat as a GPT wrapper? And I know that there's a lot of different use cases here, but if you are, is it in that data? Is that what you're talking about? Is kind of the GPT wrapper is...
Right. Yeah, it's in that data, whether or not you acquire it through whatever means, like licensing. Perplexity is doing a lot of licensing of e-commerce data, and specific articles. OpenAI is also doing that, of course. Or you're doing it just because you built relationships with people. You're the sort of like I forget, like the store, like the record, the sort of database of record for something important within a company. The classic one would be Rippling, which is sort of all your employee data. So you're like very well based. We're very well suited if you have the custom data to produce custom AI. Like obviously that makes a ton of sense.
All right, let's go through. You mentioned, OpenAI, the foundation models, and then these other ones that, as we've called the wrappers, but there's also and I maybe call them the 4 big hyperscalers: Meta, Amazon, Microsoft, and then Alphabet/Google. I guess Meta really only has, they're not outsourcing it, selling the third-party cloud services. But we're going to go through some of these, and we're just going to play a game here with you, given what you're seeing as, what startups are going after, like what cloud provider are they using, who their relationship is with, your opinion on who's, say, ahead, succeeding, or falling behind in all these new AI tools. First one, we'll just give the one that kickstarted everything here, OpenAI. What's your opinion on them, as we say for context here, in December 2024?
Yeah, cool. This is going to be controversial because I have friends working there. So there's a broad question now of whether or not OpenAI has peaked. They led the wave, but they haven't shipped GPT-5. O1 has been inspiring, but not game changing according to most industry surveys. So like where are they going next, right? Like they're already the most valuable private startup ever, I think, unless SpaceX is secretly worth 200 billion. So like where to, right? Like how far can they go as a private company, especially when they're projected to, like, I think they lost like 5 billion this year. They're projected to lose 40 something billion in 3 years. This is a giant pile of cash that's burning. Half the senior management team has left this year. All of whom, like, individually, they're all like, I want to spend more time with family. I want to work on other things. Like, but together it smells. It just smells, right? Like it never is a good sign when most of your management team leaves. Let's just put it that way. No matter what they say. So it's ugly. But like, you got to have sympathy. This is one of the most storied companies of all time already. It's super hard to manage. I'm sure the politics are absolutely insane. And we saw this time last year where we had the management shakeup in OpenAI. So that is the question that insiders are wondering. Like, has OpenAI peaked? Like, do they have tricks up their sleeves? Obviously, you talk to people who work there, they would say nobody knows anything. But like, we know that we have we have so many tricks up our sleeves, and then people outside are just waiting for something to happen. And nothing's really moved the needle since effectively GPT-4. I would say, as far as public perception is concerned. Would I say anything else there? I mean, but they're still the leaders. So they set the industry standard for everything. When they release something, everyone follows. It's still that case. So I would highlight that there. Do you have any other questions or comments on OpenAI before we move on?
No, I think that covers it fairly well. Yeah, I think you're right. Individually, each one, you can make the case that they all left for their own reasons, but as a collection, it smells a little fishy. I guess
the entire safety team has left, which was a big part of their IP, their sort of proprietary leadership. Like, basically everyone who works on safety doesn't only work on safety. Like, I think even if you personally don't super care about safety, people who work on safety because they take AI seriously, and because they take AI seriously, then they are actually like frontier at it. Like, it's very sort of back to front in that thinking. So it means a lot that Ilya Sutskever has left and is now working on a different model lab called Safe Superintelligence, because he was the original champion of scaling at OpenAI.
Okay, makes sense. I guess, question for you: do you think there's a lasting first mover advantage for ChatGPT. I guess I don't know if they were the full on first mover, but it seems like they were the first ones to really truly gain notoriety. Is that serve as an advantage for them?
It does in a few elements, and it doesn't in some others, right? So I'll say the ones that where it does. OpenAI now owns Chat.com. There are informal surveys of sort of consumer market share, and the number like OpenAI is like far and away number one. Like the number two is Anthropic, but the average person around your Thanksgiving or Christmas table doesn't know what Anthropic is, doesn't care. They're just like, give me the chat thing, right? And the chat thing is OpenAI. They own Chat.com. So yes, there is a first mover advantage to building the brand. Same for Perplexity, which you also have on the list. Then you also have the regulatory capture advantage and the sort of data licensing advantage, right? Once OpenAI has done the deal with the Wall Street Journal or the Atlantic or whoever else they done the deal with, the people after them can't really do the deals because these are all exclusive. And that makes sense. Then there's the regulatory thing that they tried to pull with the California legislation or whatever other legislation in every other city and country in the world. Like they're always incentivized to, like, because they're the leaders, because they're first, because they're biggest first, to define the laws such that it conveniently states that everyone their size is good and everyone coming up, has all these regulations that they will be too prohibitively expensive for them to comply with. That is like, even without malicious intent, that happens. It just happens. Through the best intentions of everyone, this is how the world works. So enormous first mover advantage from there, and obviously from launching ChatGPT, where you have the largest collection of RLHF data sets in the world, right? Where it doesn't have advantages is in places where Anthropic has sought out advantage. So, for example, for coding models, Claude's sort of 3.5 Sonnet model is currently the favorite among developers. And this model did not exist 6 months ago. And now if you just talk to any developer on the street, they will generally prefer Claude over OpenAI. So the moat is pretty light in terms of specific use cases outside of consumer. But I think inside of consumer, there's a very, very standard playbook where you pursue, where you can take an initial advantage and just compound until you screw up, which Google did. Yeah.
Okay. So I guess makes sense on the sort of being the verb, I guess, especially around the Thanksgiving dinner table and anyone who's not, I guess, a developer. On the developer side, you mentioned that the most recent model from Claude is kind of the preferred one for developers. Is that something that flip-flops over time? Or when someone gets some sort of, or when a developer gives preference to a model, is that kind of, do they tend to stick with that?
They will stick with whoever is the best performing for their use cases. So if someone new were to come out, if like Amazon were to come out with like a new model that like blew everyone away, they would switch immediately. So these are just like, these are the chronic early adopters, right? They care about not just brand, but actually how, like, are you the best in the world at doing this thing for me? And they will ignore brands. In fact, like sometimes brand can work against you. Like, because if you're an early adopter, you want the hipster upcoming brand, like the stuff that nobody knows about yet. You want to sort of be in on the new thing. I would say Claude has reached past that now. Like they are the default for developers. But yeah, like I there's no loyalty there. Like there's no moat there in terms of like ongoing advantage. And I would even say that the developer tools, the Claude wrappers that has sprung up to put Claude into their developer workflows, like Cursor, like Codium, like maybe Cognition Devin, the people who store your company-specific code base, specific context, actually win more than the model labs here, because the model labs may be prohibited or are not allowed or don't prioritize storing your context. So like that accumulation of data is actually being hoovered up by the startups in between rather than the model labs itself.
Interesting. And it seems like, at least for the time being, and maybe besides the optimizations that Alphabet and Meta have gotten from their advertising stuff, which is kind of a whole different story, the nearest term opportunity for providing the most value with these models is from the developer efficiency, that's the one we're seeing constantly right away, where all these companies are saying, hey, look, we started using these things and we're just seeing so much improvement in just velocity and whatever metric you want to use. So it's quite interesting for Anthropic there. I think you kind of hit on how some of these other startups, besides OpenAI, the one that turned into a bit of a verb, just given they're the first one and how they're trying to succeed. I want to talk about some of the larger ones. And maybe the biggest elephant in the room is Alphabet and Google, the one that seems to be going vertically integrated here, trying to essentially copy everything that OpenAI is doing. What's your opinion on what they have been able to accomplish over the last couple of years and how they've tried to catch up with, these new startups trying to encroach on their turf?
Smartest thing Google ever did was acquire DeepMind for Demis Hassabis. And then dumbest thing that Google ever did was every year they continue to employ Sundar Pichai. Unfortunately, like, he's run out everyone's patience, I think, for how he's managed this whole transition.
What specifically? Like why? What is the frustration with Sundar Pichai?
That he's obviously, I think I'm making very, very broad statements, and he's still like 1,000 times better business person and technologist than I am. But I think to squander Google's initial advantages that were set up for him like 10 years ago, like they invented the transformer, they invented the TPU, they have the largest data sets of basically everything in the world, like YouTube, email, search, name it, they have it. Vision for like freaking self-driving cars, and like they have it, they have everything.
Maps, don't forget maps.
Yeah, exactly, right? So to lose that to a startup is like, bad. And then to have like two of everything. So, the classic example was Google does have too many resources, has the cash cow of ads, and then like wastes a lot of it in like experiments that don't pan out. That was Google X for a long time. Then it was Google Brain versus DeepMind. Then they consolidated Brain and DeepMind under Demis Hassabis. And like the most recent thing, this is why it's nice to talk to me instead of people who actually work at Google, because they can't say this, but through me, they can say it. The people who I talk to within Google are not very happy with how DeepMind is still being run, because there's still two of everything. And specifically, there's the GCP version of DeepMind's offerings, and then there's DeepMind's offerings of DeepMind's offerings. So this would be Vertex AI and AI Studio from DeepMind. So there's a lot of still, like, I would say, inefficiency, mismanagement. People still leave. You have Notebook LM here, which is one of the breakthrough products for Google. I called it Google's ChatGPT moment this year, in a sense of it was something that was kind of not expected to be a big hit, was a huge hit, could have been doubled down on. The creators of Notebook LM have just left Google. Like, they can't retain this talent because they can't do anything inside of Google without a lot of politics. So it's really rough. I would say, like, I'm very sympathetic. Obviously, it's hard to run a huge organization like that, but it's a reality that like they have to deal with and see their way through. And I really hope they do, because obviously they serve it like 2 billion people. Crazy. So like whatever they do has impact. So they have to take that seriously.
What would you we're on the outside of Google, so we can't hear someone say, "Oh, right, we're going to completely change our strategy. We totally got this wrong." What would you be looking at as someone from the outside as, okay, they're fixing these issues, I'm liking what they're seeing or what I'm seeing here, in regards to these AI labs and the research stuff?
All right, listeners, we've got a new sponsor here on Chit Chat Stocks. The name is Blue Chippers Club. Blue Chippers Club was recently started by two friends of ours with the goal of building a tight-knit community of stock-focused investors. Inside this awesome community, everyone gets to share and break down their portfolios with each other, participate in weekly calls, and compete in fun portfolio performance competitions. I really like this idea, and it's why we're promoting it here on the show. In fact, Brett and I are in the community ourselves and enjoy just how much value we get collaborating with other investors. When I first got into investing, a role model of mine recommended that I build a network of or community of friends to bounce investing ideas off of, and Blue Chippers does just that. If you're interested in joining, head on over to bluechippersclub.com and hit apply. Right now, it is completely free to join. The link will also be in the description.
All right, folks, if you're a regular listener to Chit Chat Stocks, then you know that we use finchat.io daily. FinChat is the complete stock research platform for fundamental investors. They have robust financial data on more than 100,000 stocks globally, including company-specific segment and KPI data. Want to see Google's Cloud's quarterly revenue growth? FinChat's got it. Like to track PayPal's take rate? They've got that too. And they recently added sell-side conferences and insider transactions to the platform. Best part is it's completely free to sign up. However, if you want to get unlimited data, you can use our link finchat.io/chitchat to get 15% off any paid plans. The link will be in the show notes.
So they are paying attention. So they've improved a lot since like the early days of Bard. Remember Bard, RIP Bard? They've improved a lot in the sense of paying attention to what people want out of them. Notebook LM was a really, really good start. I would say that the frontier models as well, Gemini Experimental, has consistently beat OpenAI now 2 months in a row, which I would say is an achievement for them. This is coming from like the start of the year when we actually did not know what the Gemini strategy was at all. Now it's pretty clear they can keep up with OpenAI, and that's a huge improvement from where they were. Creating AI Studio, I think, was a plus because Vertex AI was definitely weighing Google down. Like they're a distant 5th or 6th in the sort of market rankings that I see. I mean, they're fixing a lot. And then I think the last thing I'll also shout out is they rehired Noam Shazir, who was the lead author on the Transformers paper, and he's building his new team around him. And I would say that's a unmitigated positive. Like whatever comes out of him, will not see the effects of for another 4 to 5 years, but it will be good just because he's continued to make hits. Like every single time he comes up with something, it's been a huge banger. For those who don't know, it's not just the Transformer. Like he had the same year in 2017 that Albert Einstein did in 1905. In a sense, like every year every paper he published is basically now the industry standard. And then he did that again last year. So we expect him to do more, when he lands and ramps up at Google.
Okay, shifting gears a little bit, I want to talk about Meta. They have, I guess, I'll let you kind of summarize it, but what has their overall strategy been? And from the outside looking in, I would think they are one of the going from spending a lot of money on AI development, AI applications, to having that show up in revenue. It seems like Meta would be one of the closest, like that gap would be the closest, given that they can see the targeting efficiencies with their advertising revenue. Do you think that's true? Do you think they're going to see some of the highest returns on the advertising or on their AI spend? And then I guess maybe what are your thoughts overall on Meta's AI initiatives?
It clearly has done very well for their stock price, I would say. Reinventing themselves from a VR company to an AI company in the last 1.5 years, maybe 2 years, has been fantastic for their stock price. I think it's added like $1.5 trillion of value to them. It's
500%
incredible.
in 2 years, yeah. Quite a turnaround. Yeah, on that narrative.
We're an AI company now. Forget the name. Forget the Meta rebrand. Like we're an AI company now.
Exactly.
Actually, it's even more gaslighty. It's like we've always been an AI company. Look at all these things we did with Facebook AI research and hiring Jan LeCun. So we've always been there, just like we've been in everything. Like they worked on a phone. Like someday they're going to come out and say we've always been a phone company. I don't know. Yeah, so like Meta's done super well. Like they've adopted the Android strategy to OpenAI's iPhone strategy, right? Like and like someone had to fill that role, and probably Meta was the right person to do it. Was the right people to do it, because this is basically the exact role in the tech ecosystem they've always played. Like they've never they're like out of the list that you have here, they're the one company that doesn't provide cloud services. They only do consumer, and they're really damn good at it. And in the tech world, they specialize in basically open sourcing tech for everyone else that is proprietary to others. So where like maybe Google would have like the Angular platform, which is very owned by Google. Meta open sources React, where Amazon would have DynamoDB, so like a kind of very proprietary platform. Meta open sources like what eventually is now Cassandra. Like it's very interesting that Meta basically just always open sources the stuff that other people close source, and that is their tech strategy. Part of it is recruiting. Part of it is a somewhat unvalidated strategy that people will build on top of Meta's Llama models, and that will create an ecosystem that benefits Meta. This is what they say in earnings calls when you ask Zuck, when you ask Jan LeCun, hey, why do you spend $100 million training Llama 3? Like, what does that do for Meta? One, it's a rounding error. That's like a day of earnings for them. Two, they will say, they'll feed you some line about how like people, are building thousands and millions of derivative tooling and models for Llama, and that benefits Meta. I don't know. I haven't seen like a huge amount of evidence for that, but like that doesn't mean it doesn't exist. I haven't seen it. But it is true that it builds a huge amount of branding for them. It helps them hire for sure. It makes them super relevant because everyone loves them because they give, 9-digit models away for free. And what's not to love? Like that's great.
Okay, we got other questions about startup spending, the invention of the AI engineer, which you think invented, if I'm remembering that correctly, and H100 oversupplying kind of the NVIDIA semiconductor stuff. But I want to hit quickly Amazon and Microsoft.
Yeah,
where do they stand as some of the big cloud providers and backers here?
Yeah, it's interesting. It's a very sort of Chinese. I see you have some listeners who are like also interested in Chinese market. In the Chinese market, there's sort of this like BAT dynamic where like if you're backed by one of the B, A, or T, then you're not backed by the others, and like everyone's trying to draw sort of feudal territories around them. And for a while, it's kind of looked that way. So Amazon's kind of very close to Anthropic. Like anything that Anthropic releases, Amazon will also have on Bedrock, right? Anything that OpenAI releases, obviously Microsoft will have, right? And it's just kind of, every big cloud has its little sock puppet AI lab that it gets secretly funding. I would say like that's not entirely true for Anthropic because Anthropic's also funded by Google. But anyway, like that is mostly true. that is the AI strategy there. Amazon has also bought Adept, which also had two of the former co-authors of the Transformer paper, and now Adept is now the sort of Amazon AGI division, which is kind of interesting. And I would say the last thing about Amazon is they've always invested in their own hardware and their own silicon. And Anthropic is now a major part of their strategy for proving that out. So in the race to replace NVIDIA, every cloud is basically investing in building their own silicon. Google is obviously ahead with the TPUs, but Amazon's probably next. And I'll probably put OpenAI or Microsoft after that. So that's Amazon. I would say like in terms of just generally cloud services wise, I think what I said last time might stand in the sense that Amazon Cloud Services, AWS, was this early leader in cloud. But now because of the AI wave, they are behind Google and Microsoft just because Amazon in general is behind on AI.
Okay. So I think that touches on the list of companies we had here. We could seemingly go through tons and tons of AI companies and get your thoughts, but I want to shift gears a little bit. So it's when I listen to you talk and I read your write-ups, it just sounds like so much money, and I guess you see this in NVIDIA's earnings reports, is just being poured into training these models. And I'm going to read you a quote that you wrote in one of your articles. It says, this is a little bit of I think it might have been a year ago, maybe not quite as long, but it says, It is now consensus that the CapEx on foundation model training is the fastest depreciating asset in history, but the jury on GPU infrastructure spending is still out, and the GPU rich wars are raging. Meanwhile, we know now that frontier labs are spending more on training plus inference than they make in revenue, raising $6.6 billion in the largest venture round of all time, while also projecting losses of $14 billion in 2026. The financial logic requires AGI to parse. I love that quote. I guess my question is
that was me being sarcastic a little bit.
Yeah. I guess my question is I can't help but wonder about the ROI here. So much money is being spent. I guess why can this continue?
Especially in the startups, like excluding
Sure.
the ones that have existing business models, like Alphabet or Meta.
If you were rationalizing this from the startup's perspective, this level of spending, what is the return? What's the outcome here?
Right. Okay. So we should split the startups. Do you consider OpenAI a startup?
Sure.
Yeah, I guess sure.
That's the largest one.
Okay. All right. So you're definitely very public markets, and I've been in private markets for 7 years now. So it's very different. My frame of reference for me, $200 million company is a big company. Anyway, so so yeah, you can justify on growth, right? The revenue ramp is unheard of, right? Now name me a company that's gone 0 to 2 billion in revenue in 2 years. Realistically, they can reach 100 billion within the decade. It's not impossible. And what's your revenue multiple on that?
Yeah, I guess that checks out.
What's the pre-mortem? What's the potential downside? Where
does
this
that
stop?
question.
Where does it stop?
Fantastic question. Yeah, well, so okay, first of all, right? I do think when I talk to finance guys, you guys are very different than tech guys, because you look for the pre-mortem, you look where does this go wrong? And then the tech guys and the VCs go where does this go right? And I think it's very important in tech investing that you get paid orders of magnitude more when things are right than when things are wrong, right? That your downside is 1x, your upside is 100x, right? So I think finance guys tend to overemphasize downside sometimes, but obviously it's different when it's public markets. Okay, rant over. Pre-mortem wise, it's going to be that there's a lot of burning of cash, and there have been AI winters before, and that we seem to have maxed out our current direction in terms of whatever GPT-5 was going to be, and now we're sort of exploring other things, and we've released 2 other models that were not GPT-5. Maybe that was it for this wave, and we're going to go into winter for another 5 to 10 years, and then the next generation, whatever is the next OpenAI comes, and whatever money you threw into this one wasn't it, and them's the shakes. It's happened before. If you weren't around in the sort of 2014 AI wave, you weren't around in the 2007 AI wave, it's happened before, and people flamed out, and they were all really smart and really well intentioned, and had all the right things and all the right PowerPoint charts, and it just didn't work just because the tech didn't scale. And that's not the fault of anyone. It just that's the risk that you take. I would say that's the flippant answer. Pre-mortem wise, I would also say that there's a huge amount of challenge for AI specifically in terms of incumbents versus disruptors. AI is a very powerful force that helps incumbents. So in the sense that Google has lost a huge amount of advantage to OpenAI and Perplexity, but it is still the default search for 5 billion people on planet Earth. They can get it back. The sheer amount of incumbent dominance that Google has can still win. The sheer amount of force of nature that sort of the Meta is exerting just in terms of its social networks can make it still win on its AI stuff. So it is absolutely not clear that one of these startups, that's sort of AI foundation lab startups, will win here. I tend to view these questions as not that useful, because to me it's going to be clear that some mix of incumbents and startups will win. So it's not an either or. They both will win. It's just which of them will win. Some of them will lose. Some of them will win. Like, it's not useful to discuss these categories this way. I'd rather have it the other way and go like, okay, what are the determinants of success? And some of the incumbents will have it. Some of the startups will have it.
Okay, let's talk inference training and costs. So it seems like, from our point of view, and again, we focus on costs, where things can go wrong, what's all the spending going to turn into ROI. It seems like the biggest bottleneck is the fact that it's very, very expensive to train these things and then run them. Let's imagine a world where all these smart people just come up with all these innovations that decrease the cost of these things by 1,000x a decade from now. How would that change everything in the industry? Do you think that's likely? Do we see that helping or hurting the cloud providers? That's kind of what my frame of reference is, because it seems like all this stuff is moving so quickly. I don't know. I get confused on whether like the state of NVIDIA, the state of all this spending can stay, and whether these innovations can break through and make things less costly.
So there are a number of things that I want to sort of comment on here. You said decrease 1,000x within a decade. I just want
Roughly,
to give
sure.
I just want to give an FYI that the current depreciation or the current sort of scaling or efficiency curve of AI is faster than this. It is 10x per year. Per year. I'm not kidding. So 1,000x is 3 years, not 10.
Okay. Wow. Sounds pretty nice.
That is the current trend line, and obviously trend lines break, but that is the current trend line, and that is a fact. Okay. The other thing I think you need to also be updated on is that you are still in a very sort of GPT 3 and 4 mode of having a very big mental model of high upfront training and then low subsequent inference. That is in the process of changing right now because of O1. It is very clear, and I mean, yes, OpenAI would completely nail this when they hired Noam Brown, a year ago, this will be the story of the next decade, is figuring this out, which is that inference time scaling is now a thing, as opposed to training, like sort of pre-training scaling, which means that the cost of training and inference is going to rebalance such that inference will be higher. That generally is a good thing, because you can charge very good markups on inference as opposed to charging amortized cost on training. Like the training inference cost is directly attributable in a way that training is not. And the performance is fantastic as well. So the rebalance, basically, like exactly when the big governments of the world, including the US, decided that 10 to the power 25 flops for a model was too big to let you responsibly train yourself. You have to notify us when you're doing a large 10E26 run. That's when we stopped training, pre-training anyway. Like, we were going to stop anyway. So like, we let the bureaucrats in Washington think they're doing something, but actually now all the focus is moving to inference, which is really, really funny. Like you're now focusing on the thing that no longer matters, which is kind of interesting. That all aside, I would say combining this training inference shift and the overall cost reduction, I don't think it benefits or hurts NVIDIA either way. I think as long as they continue to deliver hardware improvements on the pace and scale that they have, it's good. The problem with NVIDIA now is expectations are so high that they have a new generation every single year, and all it takes is just one little misstep, and they're going to be knocked way down, just because hardware is hard and mistakes happen. And look when we had some delays in Apple. What people were like proclaiming the death of Apple. So it's going to happen to NVIDIA, and that would be the perfect time to buy NVIDIA, to be honest. And who does that benefit? I mean, it benefits consumers. I think you also need to think about a spectrum of intelligence, right? So the large labs are going to be focused on the closest to AGI that we can get. For people who don't know, there are 5 levels to AGI that OpenAI has defined. We're currently at level 2. They consider us to be reaching level 3 soon. So you can read up more about that. The rest of us have progressively dumber levels of intelligence that we can use on progressively dumber and cheaper machines, right? So like this year on my phone, I have Apple Intelligence doing like simple tasks for me, like summarizing my messages, and I can sort of ask it for visual search of my videos and photos. This year as well, by the end of this year, Chrome is shipping Gemini Nano inside of Chrome, so you can sort of query models without calling a server. So like it all runs on your machine. So those AI models are free. Like they run on your device. Like there is no cost to them. Therefore, like basically nobody makes money in them. This is just Google and Apple trying to serve their customers well and trying to say like you don't need to call OpenAI for summarizing your emails. Like you can just call your local model. It's fine, right? So it benefits the consumer. It benefits incumbents who can bundle stuff for free where other people would have to charge separately for them. Like an Anthropic is never going to get on your operating system, like unless they build an operating system, which they're not going to. So they're always going to be third party. They're always going to suffer relative to the incumbents.
Okay. Last time we spoke, you said this was mostly pertaining to the hyperscalers, but you said the big get bigger in tech, and it's kind of a broad classification. I'm trying to remember what my question was, but I think it was basically like, what are the embedded advantages of hyperscalers? And you mentioned they get bigger in tech. Do you think now we're seeing, like you said, companies go from 0 to 2 billion in revenue in 2 years? Do you think this rise and I guess recent proliferation of AI development changes that in any way, or I guess amplifies it?
Does it amplify that? Does it amplify the hyperscaler effect?
Sure.
The economies of scale, the big get bigger.
Yeah. It should, but currently it hasn't, which is cool.
Why is that?
So the hyperscalers should benefit from having that scale, having that resources, having the data centers, the customer relationships, what have you. Not even talk about data, but also to data. They should have all the advantages in the world, and the only reason they don't is basically diseconomies of scale, right? Like the problems with managing so many people and having so many egos and so many divisions and so many conflicting priorities that you can't really figure out which one to focus on. Whereas OpenAI like had one goal and they did really well at it. So yeah, there are diseconomies of scale. They do exist. And I will say that so far the evidence has been that hyperscalers have not been able to benefit from their scale here in AI. I don't know how true that is going forward. Always subject to change, always subject to change in management, to be honest. Like literally promote Demis Hassabis to CEO of Google, or get someone else in there. The Google story might change very significantly if you can use if you can use the existing assets really well. But it does take, superhuman levels of organizational management to organize 100,000 people to like pivot.
This episode is brought to you by our friends at Yellow Brick Investing. Yellow Brick is an aggregator of the best stock pitches across the internet. By tracking thousands of blogs, newsletters, fund letters, podcasts, and more, they collect and summarize the best stock pitches and bring them to you in a single place. If you're a regular listener, you know that we use Yellow Brick every single week here on the podcast to discover new investments or just find reports on companies we've already heard of. Try it for yourself. Simply go to joinyellowbrick.com/chitchat and search a company or ticker you are interested in. You are bound to find a great report on just about any company. That's joinyellowbrick.com/chitchat.
Heads up, folks. Interest rates are falling, but you can still lock in a 6% or higher yield with a diversified portfolio of high yield and investment grade corporate bonds on public.com. You might want to act fast because your yield isn't locked in until the time of purchase. Lock in a 6% or higher yield with a bond account only at public.com/chitchatstocks. So we've been jumping all over a bit on at least this topic, but one thing that you focus on a lot in your writing, discussions, and stuff over the last few years is what you've called the rise of the AI engineer. Can you go through that? What makes it different than other maybe adjacent engineers, just general software, machine learning, or stuff, or data scientists? And why are they going to be important over the next decade and beyond?
Interesting. Okay. I typically I preach this or phase this to a technical audience. So this will be interesting talking to public investors. Okay. So you know how Snowflake IPO'd and everyone was like, what the hell is Snowflake? You know how that was a thing?
That was me. That
was us.
That is happening to AI right now. So Snowflake was the darling of data engineers. And data engineers were a thing basically because Facebook had a crap ton of data and they were like, we need people who specialize in moving data around and making sense of data. They invented a data engineer. It proliferated out of Facebook to everyone else. It became a whole industry. Snowflake became a data warehouse and was one of the biggest IPOs of all time. Okay, so that thing is happening now to AI. We've seen this story play out many times in my career. So I've seen this for DevOps, data, front end, and let's call it sort of serverless or cloud engineering. So the same thing's happening to AI in the sense that there's a special subfield of software engineering that is specializing in building with LLMs, and they will, they will define the stack. Whatever new tools that they like will become the preferred stack and the preferred way to build AIs for everyone else. I saw this early and called it and promoted it as a trend. And now Gartner thinks it's peak hype. But I do think like it's basically the sort of defining engineering trend for the next 10 years at least. There will be some day that it's over. When we hit AGI, whenever that AGI is, then AI will do everything for us and we'll never have to work a day in our lives. But until that day, I often say that AI engineer will be the last job. If you're scared about AI taking away jobs, then you should think about the mechanics of how jobs are taken away. It's by someone sitting down and encoding what it is you do for work into an AI. And that is the job of the AI engineer. Ultimately, it is the job to take away the other jobs. So if you want to build AI lawyer, you want to build AI customer support rep, you want to build AI financial analyst, you're going to hire an AI engineer to study what it is you need done, to put together the systems for you to do it and to do it reliably and to scale it up to hundreds of thousands of AIs working for you. So that would be the job.
You talked about something that I thought was extremely interesting. Or maybe it's not a new idea, but it was at least to me. And that's the distinction between, or just the idea of autonomous applications, autonomous agents, and why they are the most valuable. And it made sense, at least for me as a generalist, just the fact that you said, hey, look, it can save anyone a ton of time. So what do you mean by autonomous agents? And why do you think they could be so helpful for companies, people, just anything?
Well, wow, it's kind of like hard to define because I live in a world where this is assumed knowledge. So it's really interesting to step out of it for a sec. Autonomous agents, I would just kind of think about it to the common person as having an assistant, like a secretary or a virtual assistant or executive assistant. If you ever worked with one of those, particularly if they're remote, if you've never seen their face, they work in the Philippines or something, you just email them and stuff happens, right? That's an agent. Right now, that role is performed by a human, just like humans used to perform the computer role in the 1950s for NASA. Like right now, the humans are performing the virtual assistant role because they live in the Philippines and they're 10x cheaper than people in the US. But that will go to AIs as well. That is guaranteed. It is already partially going, right? Like the problem right now is we live in this liminal stage where not everything works well yet. So we have to like scope it down to the subset of things that work well and don't use AI for the stuff that doesn't work well. But like, I always say like, you don't even need AI to have a good agent. Like my perfect agent for me is my scheduling link that you use to book me for this call. It's a Calendly link, right? Like I sent you a link, you booked yourself, you could have rescheduled, you could have canceled, I could have canceled, I could have rescheduled. And like, we didn't have to talk to each other. We just like dealt with this link. And that's great. Like it manages my calendar for me. I have a bunch of these out to different people that need to work with me asynchronously. And that's great. So I think like that is the promise of the agent. Now I think that is one agent working for you. And I think the scale here is, the promise here is defining one sort of AI employee. This is what Jensen Huang loves to call it. Like he has this vision of AI employees for NVIDIA as well. Defining that and then scaling that, like it's just copy paste to have the next 100 or the next 1,000 working for you. And this is way better than hiring humans because they don't need holidays. They don't need silly things like human rights. And they work exactly the same. So there's no training time too. Like once you train one, you've trained all of them. So there's just like an enormous amount of advantage to having these things. And then finally, I think on the humanity level, like we're basically topping out in human population. Like based on projected growth rates, we're going to top out at 10 billion people. I think this is like really nice that we're figuring out how to scale intelligences just as human intelligences top out, right? So ultimately, we're going to need tens and hundreds of AIs working for each individual human for us to keep scaling the way that we are scaling. And I think that's beautiful.
Yeah, that does sound quite nice. And even moving beyond the virtual agents, which I've seen some ideas from, I think it was an investor talking about this, about the future where there's millions upon millions, maybe billions upon billions of virtual agents talking to each other online and, figuring things out. But what about, and I know you're more in the startup land, so you see some of this stuff. What about that in robotics? We've seen a lot of ideas and you can kind of connect the two together. Well, we put an autonomous or AI agent or something that's been trained, an AI employee within a robot, and they can replace some jobs that aren't that great for some people and provide a lot of value for society. Are you seeing that at all, or is that something that is maybe way far out into the future?
No, it's here. It's they're walking around. I mean, like half my rides are all Waymos, right? They're all robot drivers.
Right. Yeah. Yeah.
It's really like if you have the means and you haven't driven in a driverless car yet, like get on that. Like they are in Teslas, they're in Waymos. This is coming. It's going to reshape our cities. There'll be no more parking. It's great. Okay. So they are coming. Physical intelligences are a thing. And there's always the question of why humanoid forms, because it's just a quirk of nature that we have 2 arms and 2 legs. But the simple answer is that we built the world to fit us. Therefore, now we must build machines to fit the world that we built for ourselves. So they probably should take humanoid forms. They can take jobs that are downright dangerous for people. That's fantastic. And also, potentially if we don't watch where we're going, they can also fight for us, which is terrifying. But yeah, it is absolutely the case that they should take warehouse jobs. They should take the hard menial labor so that we can do the higher value add stuff. So I think it's coming. Did you guys see the videos of the Optimus robots shopping for Kim Kardashian?
I did not. No.
No.
They're walking around out there. The problem with Optimus and the problem with Elon in general is that you don't know how much of it is real. So a lot of these are teleoperated by humans, like sitting behind a camera somewhere. But honestly, even that is fine. Like even that is training data. Even that will be learned by a model someday, and then you can take the human out of it. And by the way, teleoperation is still cheaper than having a human there physically in person. So it's fine. These are just cars that walk. We're comfortable with self-driving cars. These are just slightly different cars. So it's going to happen. I would say obviously put this 1 or 2 generations behind how production ready it is for the everyday consumer. Like it's so much easier to move things in the world of bits than in the world of atoms. Let's solve the bits stuff first, like the software first, then we can move on to the hardware, because the software clearly isn't done yet.
Yeah, I saw, or you had some analogy within one of your pieces where you said this current iteration or kind of the new products out there, the stuff that a lot of startups are working on, all these new innovations seem very similar to what self-driving was maybe 2015 through 2017. And I remember back then, everyone was saying, "Oh, it's right around the corner," and technically it was. It just took kind of 8 to 10 years to get there, to where it started proliferating throughout society. But it might take maybe that long for some of these new things as well, which can seem like a long time, but in the grand scheme of things, it really isn't.
It's nothing. Like it's like we took like 30 years to roll out the car. Like we had the Model T, and it took a long time to roll that out.
All right, I think we've covered a lot of the questions we had expected to ask beforehand. I guess one question that I'm thinking of now, we do have primarily public market listeners that listen to the show on a regular basis. It sounds like a lot of the development is happening in the private markets at the startup level, because people, we've seen the exodus of executives. Once they go into big tech companies, they don't like the politics. They want to be able to operate in a smaller company. For the public market investor, instead of where can they get the most exposure to AI, what industries in, I guess, the medium term, we can call it, I don't know, maybe next 5 years, will be the most adversely impacted by the advancements in AI?
High margin, low NPS software businesses.
Okay. So the legacy, I guess, software businesses.
Like, is that like an Oracle? Is that what you would? Yeah.
Yeah. Because like the cost of making new software, the cost of porting software over has just vanished overnight. Like it's a lot cheaper to write software now. If you haven't tried it, I feel like I need to throw out things like, there's a lot of theoretical talk in this podcast. Like go write in a Waymo, right? Like job one, right? Job two, go to bolt.new and type in make a Spotify clone, make an Airbnb clone, whatever. Like you'll be shocked at how far along at doing these things. Bolt.new is the one I happen to have just interviewed on my podcast, so like it's top of mind. Yes, these are kind of toy examples, but in the real engineering world, with like Cursor, Windsurf, Cognition, all these things, and not so much Cognition, but that's a different story. But like they are all real examples of the cost of software going a lot lower, right? So if you listen to the All In podcast, like Chamath is working on 8090, which is like this like grand vision of like rebuilding all legacy things with AI, and I think like that is directionally correct. I'm not sure that Chamath is the guy to do it, but directionally someone is going to crack it. Someone is going to crack it. Like he's right on the thesis. I don't know if he's the guy, but whatever. It doesn't matter. Like someone's going to do it. So like the hunt for ServiceNow is on. The hunt for Oracle is on. I would say Oracle is a little bit anything databases. Databases are very hard tech and take a lot of time to mature. So maybe not specifically the databases, but the things built on top of databases. The reason that Salesforce is so threatened by AI, that they are, Mark Benioff's doing his Agent Force thing, is because Salesforce knows that it is like a prime target for new Salesforce, whatever new Salesforce is.
Interesting. All right. Well, I have bolt.new loaded in my browser right now. I'm going to try it out after this episode. We appreciate you taking the time here, Shawn. You have quite a few, I'd say, for anyone that wants to go even more advanced in all this stuff. I mean, you have so much over at Latent Space. So why don't you tell the listeners where they can go find your work, what you're doing, and that the conference you did, and maybe you're doing it.
So the conference is not really for this audience. Conference is more for engineers learning the latest and greatest in engineering stuff. It will have zero business sort of angle to it. But maybe you like that. I don't know. Latent Space is more where I let the sort of Venn diagrams of business and tech happen. And I basically do what a research firm would do if I were reporting on these as public company stocks. So I kind of perform the analyst role, which is kind of fun for me, like because I used to do that for my hedge fund. And yeah, that's where you can check out all the interviews and the essays that we have on tracking the market. And then I think the last piece that we have right now is Small AI News. So small.ai/news is the newsletter that gives you a daily pulse So this is a completely AI generated newsletter, or like a 99% AI generated newsletter. There's a bit of human curation that surveys all of Twitter, all of Reddit, all of Discord to keep you super up to date. So this is the one that like the Andre Karpathis of the world, Subhash Chintalas of the world read to keep up on AI, if you want to get that level of granularity. So basically, I have the 6-month granularity, that's the conference. Then I have the weekly granularity, which is Latent Space, and then I have the daily granularity, which is AI News. So plug in wherever you want.
Beautiful. All right. Well, that's going to do it for this episode. Thank you again for joining. Let's hit the disclosure. We are not financial advisors. Anything we say on the show is not formal advice or recommendation. Ryan, I, or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in to this wonderful interview. Thank you, Shawn, for taking the time to join us, and we'll see you next time.